One thing we both share is the way we look at the marketplace. We look at stocks as pieces of a business that have real earnings, CEOs behind them, customers, uh, factories, plants, sell services, a whole bunch of things, not a wiggle or jiggle on the line on the chart, and that has made all the difference.
Right. Well, I'm so glad you said that, Charles, because I talk to people and they say, what do you think the Federal Reserve is going to do at the next open market committee meeting? What do you think about the advance decline ratio in the oil sector? What do you think about they're so far away from the fundamentals of what they should be thinking about. I mean, if you were running a business yourself, would you be making decisions about whether to expand or what to merge with or any other important decision based on what the Federal Reserve is going to do at the next meeting? It's kind of silly, and yet because the cable channels are full of this stuff every day, I mean, full of it in every sense of the word, people start to think that's, as investors, that's the sort of thing they should be thinking about when they make their investment decisions, and they really shouldn't.
It's like if you bought a private business, if you bought a coffee shop, would you say, I'm not going to buy it until I hear what the unemployment numbers are? And if there's a moving average crossover and there's an oscillator buy signal, it's ridiculous. But the benefit is that there are so few who do it like us. And the reason that we've been successful is simply because we've lasted a pretty long time. We've been doing this for close to 40 years each, and you don't hear too many people that can brag about that.
No, they get washed out one way or another, and we're survivors.
Yeah, well, the thing is, Alex, it works, right? So if something works and it's not a get rich kind of thing, and we don't ever talk about stocks as really the way gamblers look at it, lottery tickets. We look at them what they are, and when you figure that out, it becomes a much easier way to invest than just trying to pick, blips on a chart and say buy here, sell here.
Right, right. I mean, listen, anybody who wants to get rich, I applaud them. I'm happy to help them. But if you want to get rich by Wednesday, it's probably not going to happen.
Right, right. So before we begin, Alex, the backdrop that we're talking in is it's 2022, a whole different backdrop than we had in 2021 and even 2020 during COVID. We're watching the Russia invade Ukraine. We're seeing the tremendous agony and troubles that they're causing these people, and the world's response, or rather lack of response. And in addition to that, we're seeing prices of commodities, oil, wheat, and gold hit new highs.
Right, right. Well, the old saying is that markets hate uncertainty, and armed conflict is the ultimate uncertainty. Everyone's wondering how bad it's going to get, how many civilians are going to die, when they're going to capture the capital, who's going to run the country when when the inevitable happens. Unless some kind of peace gets brokered and some kind of deal can be negotiated. So it has sort of put the world markets on edge. And understandably so, because there's a lot of uncertainties out there right now.
Right. And uncertainties, if you look over the short term, it's a problem for short-term traders. But for long-term traders, or for investors, long-term investors, people look and have a long-term time horizon. Boy, the world's your oyster.
Right. Well, if you're a long-term investor, all you have to do is look at a 200-year chart of the stock market and say, where were the best buying opportunities? Right in this dip, right in this crash, right in this pullback, this correction, this bear market. And so historically, we know that people will look back and say, well, wow, I wish I'd been buying something good back then. But sometimes it's tough to get people to realize that at the time.
Yeah, it's only the good old days after you live through them. When you're living through them, it's like it looks really terrible, and day to day, and you're watching all of the information just come pouring at you like a fire hydrant. But if you take a longer term perspective, these kind of blips in the market, they're the buying opportunities that you just wait for.
Yeah. Well, the thing is, in the luxury of hindsight, they are blips. But when you're living through them, I was always astounded when I was back in my former life in the money management business, that the same clients who panicked and sold in the crash of '87 were the ones who panicked and sold during Tiananmen Square in 1989, and panicked and sold when Saddam went into Kuwait in 1990, and again and again and again, and each time it was something completely new that I never figured this would happen. 9/11, who figured that would happen? Global pandemic, who figured that would happen? Who came into 2022 thinking that Putin was going to go into Ukraine? Nobody. So I don't mean to make light of the fact that there are serious and often very scary events that cause these so-called blips. But the important thing to bear in mind is that businesses will go on. Businesses exist to meet all of people's wants and needs, the ones that can't be provided by government anyway, like defense and interstate highways and so forth. And so growing profitable businesses are going to see their share prices appreciate over time. And as an investor, you want to share in that growth. So that's, to me, all this macroeconomic stuff, all the geopolitical stuff, all the Fed watching, it's really white noise, a distraction.